Hello learners, welcome back. Today we are going to do a simple question on ledger accounts and how to balance ledger accounts. Now the question reads, the following balances were extracted from Blair Traders on 31st January 2015. So we are given machinery 80,000, bank 350,000, stock 30,000, creditors 50,000, debtors 20,000. You're given additional information. The following transactions took place in the month of February 2015. So on 2nd February, Blair paid creditors Kenya shillings 20,000 by check. Then on 27th of February 2015, Blair received a check from the debtors amounting to 10,000. So we are required to record the above transactions in the relevant ledger accounts and balance them off. Now, to start off with this question, you need to know how do you treat those balances you're given there. Because remember, you're going to open each account for every balance. So the balances we have there, those are balances brought down for each and every account. The balances brought down. So we start with number one. Which account do we open? Is machinery account. You can open a machinery account. Yeah. So ledger accounts in form of a capital T. Yeah. Whereby this is the debit side. That's the credit side. So we have the name of the account is machinery account. Machinery account. Yeah, you can abbreviate account as A/C. Machinery account. So the balance is machinery account is an asset. This one has a debit balance. Therefore, start with the date is 31st of January 2015. These are the balances that were brought down, amounted to 80,000. Then the next balance we have is for the bank account. Yeah, you can have our bank account here. Bank account. Yeah, this is the debit. This is the credit. Bank account. So bank account is also an asset. Yeah, so it has a debit balance. Has a debit balance. Yeah. So on 31st January 2015, we have a balance to be brought down for the bank amounting to 350,000. 350,000. Next one is a stock. Next one is stock. Yeah. Stock account, credit, and the debit. Stock account. So stock account, the balance is 30,000. The balance is 30,000. We have on 31st January 2015, the balance for stock that was brought down amounted to 30,000. Next is creditors. Next is creditors. That's our debit. That's our credit. So creditors is a 50,000. A balance of 50,000. Now, creditors is a liability, hence has a credit balance. So 31st January 2015, the balance that were brought down amounted to 50,000, amounted to 50,000. So this is, didn't name this account, is the creditors account. Next is the debtors account. Debtors account. Debtors account is our credit and our debit side. So debtors, debtors is an asset and therefore has a debit balance. So on 31st January 2015, we have the balance that are brought down amounting to 20,000. Amounting to 20,000. Yeah, so far we've opened ledger accounts for all the balances. So next step, we go to the additional information, whereby we are told that the following transactions took place in the month of February 2015. On 2nd February, we are told that we paid creditors by check, paid creditors by check, paid creditors by check. Now, what is the effect here? On this part where Blair Traders paid creditors, one thing we are seeing is that the creditors, the amount that the business or creditors reduces by 20,000. It reduces by 20,000. So the creditors account is going to reduce by 20,000. And then also we have a check. Check paid using a check. So this means that the amount of money in the bank is going to reduce by also 20,000 is paying. This money will be withdrawn by the creditors, 20,000. So bank account is affected. Bank account is affected. And how is the bank account affected? Is that it reduces by 20,000. Bank account reduces also by 20,000. So that is what we are going to effect in our ledger. So we move on. So we come search where we have our creditors account here. You've seen that creditors account is going to reduce by 20,000. So how we reduce creditors? By debiting. Reduction in creditors is by debiting. The date is 2nd of February 2015. Creditors were paid using what? Bank. 20,000. So you don't write here paid. You just indicate the other affected account. Or in other words, they were paid in terms of what? And also you don't write check. You write the name of the account. Check affects which account? Is the bank account. Next is bank account. Also we are seeing is reducing by 20,000. Bank account reduces by 20,000. Bank account reduces by 20,000. So we credit this figure. We have on 20, it is on 2nd, of February 2015. Where did this money go to? It paid creditors. So you write the name of the other affected account. How much? 20,000. 20,000. And I go to the other transaction. Received 10,000 from debtors by check. By check again. So here, debtors. And also we have the bank. Sorry, not the check, but the bank account. Sorry. The bank. This money will affect the bank account. So what is going to happen to the debtors account? The debtors have reduced what they owe the business by 10,000. So we reduce that by 10,000. And also bank account gains. Yeah, gains. Remember, this is a business that is being paid by the debtors. So the bank account gains 10,000. Again, it gains 10,000. So we effect that in our ledgers. We search for our debtors account is reducing by 10. Debtors account, where do you have this one? Reducing by 10,000. So we credit on 27th, yeah, of February 2015. Debtors paid in form of check. So this check will be taken to the bank to increase the amount of money in the bank. So they paid using bank 10,000. Next is the bank account. Where do we have the bank? This one. So the bank here gains 10,000. So we debit on 27th of February 2015. Where did this money come from? The debtors. How much? 10,000. And we are done. The next thing is to balance. How do we balance? Now you compare between the debit and the credit side. Which one is a bit higher? So for instance, we have 350 plus 10,000, that is 360. That's on the debit side. On the credit side, in this account, we have 20,000. So clearly, debit side is bigger than the credit side. So the balancing figure will be 360 minus the 20,000, the smaller figure. So you take the bigger figure minus the smaller figure. So 360 minus 20,000, that gives us 340. That will give us 340. So where do you place this balance? You place it on the side with less totals, and in our case is the credit side. So on 27th of February 2015, we have seen that the balance to be carried down will be 340,000. Remember, you start by totaling both sides. You check which side has the higher amount. Yeah, so you see the higher minus the lower, and the answer you get, or the balance you get, is the balancing figure. In other words, you place it on the side with the least amount, and in our case, this is the side you are supposed to place that. And then we are done. Get the totals, and remember to double underscore. 20 plus 340 gives us 360,000. 350 plus 10 gives us 360,000. We've balanced the bank account so far. Next is the machinery account. Machinery account, we have one item here on the debit side. On the credit side, we don't have. So when you're getting the totals, we say that the debit side has 80,000. The total for the credit is 0. So what is the difference between 80 and 0? It is 80,000 minus 0 to give us 80,000. Where do you place that balance? On the side with the least amount. So it is our credit side here. On 27th of February 2015, the balance to be carried down will be 80,000. The balance to be carried down will be 80,000. Then you balance, get the totals, the final totals on both sides. This side is 80,000. This side is 80,000. Yeah. Next, come to stock account. Sorry for that. Stock account. Stock account. stock account. Yeah, we have that 1,000 on the debit side. Credit side we have 0. So the side with the high amount is debit. So that minus 0 gives us 30,000. 30,000 minus 0 gives us 30,000. So that will be our balancing figure, and we place it on the side with the lower amount. In this case is our credit side. It has a 0. 27th of February 2015, we have our balance to be carried down will be 30,000. Yeah, we are done. We close our account by writing the totals and double underscoring. Yes, we are done. Next, we have our creditors account. Our creditors account, on the debit side we have 20,000, on the credit side 50,000. So clearly looking at that, the credit side is a bit higher than the debit side. What is the difference between the two sides? 50,000 minus 20,000 to give us 30,000. Where do you place that balance? On the side with the lower figure. So we have on 27 February 2015, our balance to be carried down will be 30,000. Remember, we put the difference. 50 minus 20 is 30. Yeah, 50 minus 20 gives us 30. So what I am referring to as the balancing figure. Then you can close your account. Remember to double underscore. So this side, the totals is 50,000. This side, 20 plus 30 is also 50,000. Yeah, that's it. Lastly, we have the debtors account. The debtors account, where we have on the debit side 20,000, credit side 10,000. So what is the difference between the two sides? 20,000 minus 10,000 is 10,000. So where do we take this difference to? The side with the lower amount, the lower total, which is the credit side. In this case, on 27th of February 2015, we have our balance to be carried down will be 10,000. So this 10 plus 10, 20. This is 20. Yes, that's it. That's how you're supposed to go about that question. That's how you're supposed to go about that question. Yes, that's how we balance ledger accounts. That is how we balance our ledger accounts. And we are done for today. See you in our next lesson. Bye bye for now.